Alright y'all, so in this video here, I'll be answering the question of what is the best way to trade options if you have a very small amount of capital, like perhaps under $1,000. And even though I do want to say that you perhaps may not like my answer to that question in this video, I do think especially if you are a beginner with only a few $100 to start trading with, it's very important for you to watch this video and just hear me out. But that being said, I don't also want to discourage anybody from starting to trade because, as you'll also see in this video, there is a very simple way to get around this issue of only having a very limited amount of capital. Now, briefly here before we get started, I do have a very cool limited time offer for you guys where you can receive up to 10 free stocks where each stock could be worth up to $2,500. So basically, there is a newer brokerage company out there called Moomoo, which is based in Palo Alto, California. And again, for a limited time, they are offering you to receive up to 10 free stocks when you sign up for a brokerage account with them using my link in the description of this video. And so the Moomoo trading platform is highly competitive with other comparable platforms like Webull and Robinhood. There are absolutely no trading fees on stock or option trades. You also get direct trading access to US, Hong Kong, and Chinese markets, which is something that I have not seen being offered by competitor platforms at all. Moomoo also comes with a free, very advanced, yet totally user-friendly trading platform that you can install on your computer or your smartphone. And everything, of course, is regulated by the SEC and FINRA, so your investments and your trades are properly insured. And I myself opened up a brokerage account with them recently, and I got a lot of free shares of DraftKings, which was pretty cool. But again, you could get lucky and win some full shares of Google or Tesla as well. And so if that sounds interesting to you, then again, use my link in the description of this video to sign up and get your free stocks. And then secondly here, in case any of you guys are brand new to the channel, again, my name is Scott, and you can also find me on SKILLSHARE as well, where you can take my very detailed classes on options trading or stock market investing. And you'll also find some links to a few of my introductory courses in the description of this video as well. So be sure to check them out, and when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. Alright guys, so now diving in here, and just to give you the short answer first to the question of what's the best way to trade options with limited amounts of capital, perhaps under $1,000. Short answer is, in my opinion, you should not be trading options with that particular money at all. So of course, like I said, some of you guys probably don't want to hear that answer, but again, just hear me out. Let me explain my reasoning first, and then also at the end of the video, I'll be talking about a very simple and effective way to get around this issue of having only limited amounts of capital. And so essentially with trading, whether you are trading options or stock, cryptocurrency, doesn't matter, but just trading in general, trading is a probability-based game, right? Where every trade that you make, you are quite literally rolling the figurative dice, so to speak, and hopefully the outcome of that roll, the outcome of that trade is indeed a profit, right? And the reason why you can describe trading in this way is because the stock market, specifically stock price fluctuations in the short term, are very close to being perfectly random. So therefore, every trade that you make does have a specific probability or chance of that position actually paying off. Now, of course, with that being said, the main idea here, if you are an experienced or professional trader, the whole point is to construct a trading system that puts the odds in your favor, such that on average, your average profits do outweigh your average losses. And therefore, over time, your portfolio grows in value. And ultimately, if you can achieve this, which is a very difficult thing to do, this is what's called having a positive expected value with your trading. Now, of course, if you are a beginner trader with only a few $100 of capital, chances are you will not have a positive expected value with your trading methodology right out the gate. Right, trading in general is a very difficult thing to master. It takes a long time. A lot of practice and experience goes into this. So again, the chances that you're just going to start trading and make a lot of money over a long period of time, it's very slim. So already right out the gate, you are at a disadvantage, and that's just a matter of fact, right? If trading was easy, then everybody would be a trader, and that's obviously not the case. So in order to even have the chance, or I should say the potential to have a positive expected value with your trading, it does require two things. Number one, you do need a lot of trading occurrences, right? This is all about averages, average profits, average losses over a long period of time. So you do quite literally need a lot of data points, a lot of trades for the probabilities to actually play out accurately, right? For example, when you flip a coin, the chance that it turns up heads or tails is 50-50, but if you flip that coin only 10 times, you could get all 10 heads in a row. However, if you flip that coin perhaps 1,000 times, then at the end of that, you will see that roughly 50% of those flips were heads, and then 50% of those flips were tails, right? Again, it just takes time, enough occurrences for the probabilities to actually play out. So that's the first thing that you need to have a positive expected value. The second thing is you do need enough capital to withstand some pretty bad losing streaks, right? So again, with our coin flipping example, you could flip that coin 10 times in a row and get all heads. Same thing with trading. You could make 10 trades in a row and have all 10 of those trades be losers. So of course, if you only have a few $100 to trade with, then if you get unlucky enough to run into a bad losing streak like that, you could lose all that money instantly. And then next up here with my second point, the best way to mitigate the effects of a large drawdown and also to ensure you do have a high number of trading occurrences is to properly diversify your entire trading portfolio. And specifically, I'm referring to diversifying both in the actual stocks that you're trading as well as the trading strategies that you are using. So for example, with my own trading, I typically on average have at least 5 trades on simultaneously, and I make sure each one of those positions is on a stock that is very different from each other. So for example, I might have one trade that's on a tech stock, a different trade on an airline stock, a third position on some company that's perhaps involved in the mining of copper or silver, etc., etc. And so, of course, the main point of doing this, right, is to make sure that if one sector or one industry has a major downturn, that's not going to destroy your entire portfolio. And the same idea applies to diversifying the actual strategies as well. For example, you don't want to have only bullish trades on or only bearish trades. I, for example, always have an even mix between bullish, bearish, and neutral. But again, the issue here lies in the fact that if you have a very small amount of capital, you will not be able to achieve adequate diversification. Right? And that's because if let's say you have only $500 of capital, then just based on my experience, it's very difficult to find a high quality trade where you are risking less than perhaps $100 on that position. And that $100 is already 20% of your $500 account. So bottom line, in just 2 or 3 trades, you are already completely maxed out on the amount of positions that you can have on. And even with those kinds of positions where you're risking maybe around $100 per trade, you're pretty much just going to be limited to either buying out of the money options, which is basically a guaranteed way to lose your money over time, or perhaps you can trade spread-based strategies like credit spreads, debit spreads, or iron condors. And those strategies by themselves are definitely great and effective approaches to trading options. But the issue though is with limited capital, you'll have to use them with like $1 wide spreads. And so naturally with super narrow spreads, you're going to have almost no exposure to the option Greeks. So delta, theta, vega, and gamma. And also your commissions on each trade, as well as the slippage cost between the bid-ask spreads when you're buying and selling contracts, those are going to eat into your profits significantly. So ultimately here, guys, with very limited capital, it really is almost impossible to be consistently successful when you're trading options or really anything in general. And I can definitely speak about this issue personally because when I first started trading many years ago, I began with $1,000 in a Robinhood account. And keep in mind also, I was using credit spreads and iron condors and those kinds of effective strategies, but with $1 wide spreads. And ultimately, the moment I started trading, my account only went downwards. And again, that was just because my average profits were just being eaten up by the slippage costs between the bid-ask spreads of the contracts I was trading. Fortunately, with Robinhood, though, there are no trading commissions, so that helped a little bit. But ultimately, my average profits just could not outweigh my average losses. So bottom line here, guys, is quite simply, it is darn near impossible to be consistently profitable trading options with a very small amount of capital. There are just too many things that are putting you at a disadvantage. But that being said, though, again, I don't want to discourage anybody from beginning to trade. So that's why in the meantime, while you're still saving up more capital, you can be paper trading. And platforms like thinkorswim back here or Webull, also Moomoo, all these platforms do offer excellent paper trading features. And just to clarify here, if you don't know what paper trading means, it simply refers to the fact that you can trade with real-time stock and option pricing just with fake or simulated money. So for all intents and purposes, paper trading really is real trading. It's just with fake money. So again, in the meantime, while you're saving up actual capital in your live money account, probably until you have at least $5,000 to start with, in the meantime, you can paper trade and practice your techniques until you have that amount of money. And then of course, once you do have enough capital in your live money account, you can simply switch over, and not only will you have enough real money to give yourself an adequate chance of being profitable in the long term, but now with all that practice, you have a lot more knowledge and experience to know exactly how to trade with that money. And so with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want up to 10 free stocks from Moomoo, then again, check out my link in the description of this video. And also, if you have an interest in taking some detailed classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links also in the description of this video. And finally here, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.